To explain the new strategy, that only applies to gold and silver. So this only applies to silver and gold in US session. I am going to use the video from the gold and silver course that I made. It's a perfect video. I don't need to improve it or make any changes to it, apart from one thing. One thing that I will say is that you do not need your higher time frame bias when you trade these news events. It does not matter what the higher time frame bias is. So you could have a bullish 4 hour on gold and you could still take sells on the news because the news dominates everything out the way. If the news is bearish, it's going to move bearish no matter what the overall trend structure is. So this is the one time in the entire trading market in which you do not need to use your higher time frame bias with the trade. So when you are trading these high impact news events, forget about your higher time frame bias. It doesn't matter. So now I'm going to break down the actual strategy. Right, how to trade the high impact news events, the planned news events that are coming. Can we actually trade these? Yes, we can. Do we want to trade the initial impulse move? No, absolutely not. But I'm going to show you all about that right now because we can take advantage of these moves because the markets are very manipulated at this time. But if you know how to spot this manipulation in the market, you can make some good money out of it. I've got 3 examples, all from the latest US CPI release, which at the moment is the biggest news possible in the market because inflation is just flying right now, especially in the United States. So that is what is heavily driving the market in these times, meaning these moves are very manipulated at the time. So I've got 3 moves to show you from these points, but briefly I'm just going to explain just with kind of like drawings what exactly I'm talking about right here. So say we have gold and then we have CPI coming out. We know that CPI comes out at 1:30 in the afternoon. We know that is when we are told as retail traders, we are told that is when the news comes out. But the people who actually move the market, they know the news before it is released to us. So by the time it is released to us, they have a plan on how they can make their money. I am not a big believer in all of these kind of stop hunt theories and all that. I'm not a big believer in that. But this is a case of manipulation in which I believe the markets are very manipulated and how we can take advantage of it. So as I've said, they know the official data before it is released to us. So they have a plan on what to do. So say the data is very bad for the US economy. This means fundamentally gold should increase in price. So we're expecting gold to increase. But what you'll often notice is that it doesn't. Initially, it drops off hard. Now, this is where I believe, and I have good reason to believe, that this is where the manipulation is taking place. So it's all to do with FOMO, and there is always people in the market who are in the opposite direction. So what I mean by this is, say price is trading around here before the news is released. As soon as the news is released, and it's bad for the US economy, so gold should rise, price pushes down hard. In this downwards move, a lot of people get stopped out. A lot of people get into FOMO sells, which is not a good idea. You do not want to be selling as price pushes down when the news is good. So a lot of people get in the market at this point, but then price will tap into a lower time frame zone, reject it, and then push way, way harder off into the opposite direction. Now this move here is what we're looking to catch. So this is pretty much the London theory, which I've shared, in which when London opens, it pushes to a zone, then rejects and moves in the opposite direction. But in terms of fundamentals right here. So I'm just going to show you exactly what I mean by this with 3 examples. So now you know what I mean. So the news is released, price is pushed in the wrong direction, fundamentally the wrong direction. The big players make some money. They tap into a lower time frame zone, and then it pushes off into the opposite direction. Now, this lower time frame zone is what I have taught you on this course, what you should know. As I'll show you, that's just a theoretical example. So what you can see is that news was released in this candle here. Now, it is risky trading gold on these releases because gold is just the beast. It is so volatile. But what you can see is that price, if I just show you lower time frames, the previous day's US low was that there. And then the day before that, the US high was that zone right there. And as you can see, on release, price dropped down, tapped into both of these zones. People who got caught in FOMO sells there. price drops into both of these zones. And obviously, with bad CPI numbers, which are bad for the US economy, we're expecting gold to be bullish. That is the most simple of fundamental knowledge right there. Gold is just so inversely related to the US economy. So what happened? The price tapped into both of these previous US zones, rejected them both, and then pushed to the upside hard, as you can see, about 170 pips or so.